We are down now in the stock market about 10% today. I hope my stocks are part of that 10% because last night some things came together for me. And if you are looking at the stock market, if you are looking at conventional wisdom, it will always tell you, do not draw your money out. 4 weeks ago, I said to my wife, honey, I want to pull the money out of the stock market. Now, I've done it before. And we have lost money because we've pulled money out and something didn't happen. It was just a temporary thing. But I can't stop from hearing my grandfather's voice. My grandfather lived through the Great Depression, and anybody who had grandparents that lived through the Great Depression, you knew a couple of things. Don't waste food. Don't waste anything. What do you mean you're going to throw that pair of pants away or that shirt? No, give it to me. I'll mend it. They learned things. And I want you to really understand this. If you don't know somebody who grew up in the Great Depression, you won't be able to relate to this because there's no one like this in America anymore. They were so spooked by the Great Depression, they still saved all of their scraps. They still saved all of their wrapping paper on Christmas. They did everything. Save, because, quote, you don't know what it was like and it can come back. And I remember my grandfather saying all the time, those people who had money in the Depression, those people who made money in the Depression are the ones who didn't lose it in the stock market. And so it was a generational thing that they got and we didn't. From October 1929 to 1932, the U.S. stocks lost 90% of their value. That kicked off the Great Depression. They kicked off that 3-year decline by losing 30% of the value of the stock market in 45 days. Now, I want you to listen carefully. Starting February 12th, 2020, and through last week, U.S. stocks lost 30% of their value in 20 days, more than twice as fast in 1929. In the last 10 trading days, stocks have hit their 7% loss trading stop, so-called circuit breaker, designed to stop panic selling. It's been hit 3 times. As of today, 4. We just hit another one. We're now down 10% for the day. We were down almost 9% before they could close it. It's supposed circuit breaker blows at 7. By the time they got that thing closed, it was down 9%. We're down almost 10. The next circuit breaker is at 13. And the one after that is at 20. Now, there's a reason why I'm telling you all of this history, and I want you to pay attention closely. And I am not a financial advisor. I am not somebody, I lose money more than I keep money. So take my advice. Sorry, I just got an urgent message from somebody regarding this, so I'm going to try to remember that. Don't take my advice as gospel. Take it as these are the facts. Then do your own homework. We have something. Let's start here. Starting in September 2019, and this is one thing that really bothered me a lot. And we did several episodes on it. In fact, we should put them all together because if you're at home, you can binge watch a few things on the archives of the Glenn Beck TV program. But in September 2019, the Fed started making overnight repo loans at the rate of $75 billion a night to the banking sector. Now, what this means is when banks close their door at night, they close the shop at 5 o'clock, they have to have enough money in the vault to cover any of the so-called assets that they have that are actually loans, the liabilities. So they have to cover the liabilities in case something happens. They have to be able to have enough cash in the bank to be able to cover all of those liabilities. We've had this now since the Great Depression. And we used to have something that was called the discount window. If you couldn't do that, you would go to the Fed's discount window, where you would get a special rate. It was not someone prior to 2008 any bank wanted to use, because it was kind of made as a shame kind of place where you would go and it let the other banks, oh, he may not be solvent. I don't know if we should really trust that bank. Should we loan to that bank? So nobody wanted to use that. Well, the Fed started making overnight loans at the rate of $75 billion per night. That means some of the banks, collection of the banks, or one of the banks was short $75 billion in cash and needed to borrow that just to cover the shortfall. In November, they increased overnight lending to $100 billion. Last week, they made it $150 billion a night. Over the weekend, it was increased to $175 billion per night. To put this into perspective, Bear Stearns and Lehman Brothers needed $50 billion. They collapsed. We now have increased it to $175 billion per night, on top of the $1 trillion announced in new asset purchases. Do you remember when we said we were going to bail out the loan, the Troubled Assets Recovery Program, TARP? That was $775 billion to bail out the banks and their troubled assets. They have just added $1 trillion to TARP. They don't call it that anymore, but new asset purchases. So the Fed is buying $1 trillion, plus they're letting these banks borrow $170 billion every night. On Friday, the U.S. Treasury held an auction for 30-year Treasury bonds. You know how many we received? How many people raised their hand and said, I'll buy a U.S. Treasury bond? You know how many? Zero. What does that mean? Any money that we now borrow, we can't borrow it because nobody wants to take that debt. We are spending out of control, and no one wants to buy a 30-year Treasury bond. As of today, March 16th, the Federal Reserve has become the last buyer of resort for the U.S. Treasuries. We are out of countries that now want to take our debt, at least at this time. Now, the Dow is down 25% from all-time highs. Bank stocks are down 50%. Let me say that again. The Dow is down 25%, but bank stocks are now down 50% and leading the way down. The reason why I want you to know this is because something really hinky is going on. It's been going on for a while. Haven't been able to put my finger on it. I still don't know what it is. Nobody does, but nobody's talking about it. When the last time nobody would talk about things was 2007 and 2008. I couldn't get anybody to give me any, well, it's very complex. You know, you don't understand the system. Yeah, can you explain it to me? Well, no, it's very complex. Okay, so it's so complex you can't even break it down and explain it to me. Glenn, there are systems. Really? Can you tell me what those systems are? Because they don't seem to make sense to me. Explain it to me. You just don't know. That's the kind of runaround I'm getting right now. Now, why are the bank stocks down over 50% when the Dow is only down 25%? Why is the banking sector down? Now, this leads me to what I heard from the president last week, and he said it in such a nonchalant way. It just passed by everyone except those with eyes and ears. And I heard that and I went, why are you saying that? Remember, before he gave his speech, he met with the heads of all of the big banks. Now, that's spun as, well, he's meeting with the heads of the big banks because, you know, what are we going to do about this financial crisis? Okay. But what he said that night was, and I just want you to know, our banks are fine. They're tip top. They're fully liquid. I mean, they've got liquidation that they just take all this money and they're growing on trees. They can throw it around. They've got so much money. They're so liquid. It's almost like you could drink a bank right now. Really? Production economies have crashed in the anticipation of a global slowdown in manufacturing. Oil is down more than 50%, made worse by the Soviet or the Russia-Saudi price war. Copper is down 30%. Steel is down 30%. Aluminum down 22%. They're all indications of a global slowdown not seen since at least 2008. The world is still entering its shutdown mode. So China is reemerging for their shutdown, but who's going to be placing any orders in the next month or two? This is the real problem. The Fed just shot everything. They don't have anything left. They don't have anything left. We're almost at zero. They can go to negative interest rates, but you don't need a lower interest rate right now. We need to be buying things. We need to be going out to restaurants. That's why you know how serious this is. This is either an evil, spooky dude, complete hoax on the entire world. We've got all of them. We've got China. We've got Russia. We've got oil. We've got everyone, and everyone is in on this. Which I think a lot of people will be playing into this, but it's not a hoax. For us to make the choices that we're making right now to shut our airlines down and everything else, Donald Trump does not want to do this. He's smart enough to know exactly what this means. Now, let me tell you what they did just last night. This is what made me say, honey, go to the bank tomorrow morning. And I wrote to our stockbroker and I said, I don't care how much money. I don't care what the excuse is. No, I don't care how dumb I look in the end. I'm pulling my money out of the stock market. We're going to the bank. We're getting some cash. And I'll tell you what they did last night that made the blood drain out of my face, that makes absolutely no financial sense whatsoever, unless you got nothing left. Last night, you might have heard that the Fed said we're going to cut the interest rates. Stu, what is your understanding of what you heard last night announced on TV with the Fed?
They cut the interest rates to near zero, 0.25%. It was a big drop from where it was. And it was kind of their last bullet in their gun type of thing, where they don't really have a lot of room now to go and do anything else other than, I guess, print money and that sort of thing.
So why do we need what's the so-called discount window? Can you explain that? Brief. Why do these banks need to borrow all this money every night?
To make it all kind of come together, right? They have, at times, there's short-term lacking of cash that they need to kind of come into overnight. The discount window is there in those emergency situations, right? When they need to step in and kind of make everything work.
So you want to make sure that the banks, if they, let's say they bought a bunch of, oil, and they've got a lot of money invested in oil, if oil goes down, that they can cover everything that they need to cover. They have enough money in the bank to cover any losses that could happen overnight, so they can open their doors again, okay? That's why they need that. They also have a 10% cash reserve requirement. So the banks have to have 10% of everything they have in cash. So we're okay. Last night, the Federal Reserve removed the 10% cash reserve requirement for the banks. This is the Fed's published bank guidance document as of today. For many years, reserve requirements played a central role in the implementation of monetary policy by creating a stable demand for reserves. In January 2019, the Federal Reserve Council announced its intention to implement monetary policy in ample reserves regime. Reserve requirements do not play a significant role in this operating framework. In light of the shift to an ample reserves regime, the board has reduced reserve requirement ratios to 0%. This action eliminates the reserve requirements for thousands of depository institutions and will help support lending to households and businesses. So in other words, they have to have 10% of their reserves in cash. If 10% walk into the bank and say, I want my money, They know that nothing else is going to happen more than 10%. So 10% say, I want my money. They have the cash on hand to be able to do it. If they don't, they have to call the Federal Reserve, and you'll have to fill out a little piece of paper, and then the Federal Reserve will have to okay it, and then they'll have to ship it, and it'll be about a week before you get your money. But if you remember, Mr. Potter is offering cash right now. And what did Jimmy Stewart say? No, you don't understand. It's not like that. Your money is over here, and your money is in this house. And just fill out the paper. It's what you agreed to. Just fill out the paper, and you'll get your money in 10 days. Well, I don't have 10 days. I need my money now. This is what the Federal Reserve did last night. As of March 26th, banks are now under no regulatory obligation to maintain depository reserves against their lending. Any bank, no matter how big or small, can lend as much as they want, no matter what they have in deposits. Effectively, U.S. money printing by offering credit and loans has been extended now to all banks. What does this mean for you? What does this mean for the future? I will tell you what is going to happen next, in my humble opinion, and how to prepare for it in just about a minute. Stand by. So I'm talking about the economy and something that I think you really need to understand, what the Fed is doing. And what the Fed is doing is using all of their bullets right now. And you might be seeing this go down, the stock market go down like this because it's spooking people. Wait a minute, why are you at zero interest rates or 0.25%? Why are you doing all of these things and none of it is working? That's really, really bad news. Really bad news. And the questions that we have to ask ourselves in all sobriety and not without panic is, will we see bank holidays? If you don't know what a bank holiday is, that's when they close, just like the markets. When there's a panic or they have to be reset, do we close the banks? So you're not going to be able to get any money out of an ATM or go to the bank. Will the Fed absorb the banks that are about to fail? Does the government nationalize the banks or the Fed? The Fed last night removed the 10% cash reserve requirement for most banks. That means they're printing money. Any loan doesn't matter, just give the loan. This doesn't bode well. And have you ever noticed that nursery rhymes can be really, really cute or really spooky? Just depends on the way you read them and the context. I've heard this nursery rhyme a million years, and I wondered what use is this nursery rhyme? Because usually the nursery rhymes were the things that we were teaching kids, and we were teaching them really scary global principles without really telling them that these are real principles. Remember this nursery rhyme? She swallowed the dog to catch the cat. She swallowed the cat to catch the bird. She swallowed the bird to catch the spider that wiggled and jiggled and tickled inside her. She swallowed the spider to catch the fly. I don't know why she swallowed the fly. Perhaps she'll die. She's dead, of course. May I suggest a new revisionist look at this? This is the Federal Reserve. She swallowed the dog to catch the cat. She swallowed the cat to catch the bird. How many things is the Fed swallowing now? How many things that they have been chasing after? We've got to swallow the dog to catch the cat. They keep swallowing, and I don't know why. Perhaps she'll die. If we look into this as the Fed, perhaps that nursery rhyme teaches us something. Because the Fed now is pumping in $1 trillion to swallow all of this bad debt. You're not going to hear this, and I'm not going to harp on this, because the coronavirus is not going to kill us all. The coronavirus, if we don't take it seriously, if we don't stay at home, if we don't work from home, if we don't stop going to parties and with friends and everything else, if we don't stop, it's only going to make this worse. It's not going to kill everybody, but it's going to make it worse. But if you care about the country, if you care about freedom, if you care about the economic system that has given us the life that we have, please stay home. Please stay home.